What is up, you guys? Pete DiCarlo, and today we're going to be talking about the Fibonacci. The Fibonacci is a key tool that a lot of traders use, including myself, and is one of the first indicators slash drawing tools that you should use if you are going to start trading. It's still, even now, 7 years later, trading full time, I use this tool almost every single day. We're gonna go over in this video the Fibonacci, what is it, how to use it, why you should use it, and how you can enter and exit trades like a pro using the Fibonacci tool. But before we get started, guys, hit the like button, subscribe to this channel, and let's get started. So the Fibonacci, one of the easiest tools to use, and also one of the easiest tools to use incorrectly. I see a lot of people using this tool incorrectly, trying to trade with, the 1 minute, the 5 minute, using this tool in wrong ways. But honestly, once you can get this down, it is one of the easiest ways to spot entries and exits. So let's go over this. Let's talk about what this is about and why I use it a lot. So what the Fibonacci is going to show is retracement levels in an up and a down market, or an up and a down trend. So essentially, obviously, if we take a look here at the Nasdaq is in a consistent uptrend, even though the stock market, more so the Nasdaq has been taking a bit of a hit lately. Overall, the Nasdaq is still in an uptrend. However, if you take a look at something like, let's just say SQQQ, this is consistently in a downtrend. Now, SQQQ is probably a bad example as of right now. Consider the fact that the stock just is a triple leveraged ETF. But even if we look at something like NEO, but on a smaller time frame, you can see that the stock on this time frame is in a downtrend. So what a Fibonacci retracement will do is show you at what point is a stock pulling back for a good entry on an upward trend, or at what point is a stock pushing back up and looking for a further move down if it is downtrending. So let's take a look first at the Nasdaq, because this is going to be the easiest example to show you guys on how to use a Fibonacci. Now, overall, a lot of people ask me, why does the Fibonacci work? And it works simply because people believe that it works. It's not like when the stock comes down and hits, a key level, that it's going to just bounce because it bounces. That's not with Fibonacci's. That's, the same thing with SMAs. You can see right here, every single time the Nasdaq hits this 100-day SMA, it bounces. It's not because the stock knows, okay, it's time to bounce, we're hitting the 100-day SMA. It's because people believe that when a stock meets a certain criteria or hits a certain support and resistance, that at that point the stock has to go up, which obviously doesn't always go up, but a lot of these indicators are just the law of attraction or self-fulfilling prophecies. So the way that you get to your Fibonacci on TD Ameritrade is you right click, you go to add drawing, and you go to this percentage sign, which is your Fibonacci retracement. Or you can come down here at the bottom right side of your screen, hit this little drawing tool, and pull up your Fibonacci retracement. Now, Fibonacci retracement is not just something that's on TD Ameritrade. You can use it on TradingView, Tastyworks, any type of trading platform that you use. But once you have your Fibonacci retracement tool set up, what you want to do is find the time frame that you're looking to trade. Normally, when I trade, I am going to swing trade off of the daily chart, which means that the average play that I'm looking at when I'm trading off of the daily chart is going to last usually 2 weeks to about 3 months, depending upon how big of a pattern is setting up, how the flow is, how technicals are setting up as well. Usually it's going to end up being 2 weeks to 3 months. Now, you can do this on the hourly chart. This is the smallest time frame that I would go. This is not something that you're going to want to use for day trading or scalping. It's just not good to do that. The Fibonacci really only works on the 1 hour, the 4 hour, and the daily chart. But taking a look at our screen right now, you can see that if we draw and start our Fibonacci all the way down at our lows, right down here at $7,330 or $7,376, you can see that if we draw it and put it all the way up to highs of 13,900, this is how our Fibonacci is going to be set up. Now, let's say that you didn't draw it perfectly. You can right click, you can hit edit properties and it'll tell you what the beginning point value is. And you can actually put that in by hand. So I'm not perfectly on it. Let's just type it now, 7,376. And then we look at our endpoint, which is going to be up here at 13,900. Now on your screen, it's going to look different. I have mine set up to be gray because I don't like a ton of abrupt lines all in my face, because it just gets way too clustered for me to trade. Because you can see I already have red lines set up as my 50-day SMA. I have red lines set up, as my point of control on my volume profile. All these we'll talk about in a different video. And for my channels and for all of my drawing trend lines, I have a red line set up. So I don't want to keep it that default red, because it just becomes harder for me to differentiate when I'm quickly looking at a stock, what's going on, which lines are which. And it's just easier for me if I keep everything clean this way. You're going to see all these random numbers here, 0% up in the top left. You're going to see 23.6%, 38.2%, 50%, 61.8%, 78%, and 100%. Now, I'm not going to bore you with exactly how these numbers come out, because to be quite honest, it doesn't matter. You don't have to be a mathematician to use this, because it's not like we're using some sort of sacred math in order to do this. We're just trading it because other people are trading it. And we're going to talk about that in a little bit. So all you have to know is that these lines act as support and resistance lines. Now, as far as these percentages are considered, the ones that you want to look out for is going to be your 38.2%, your 50%, and your 61.8%. We don't care that much, and I'm going to get over here. I had zoomed in too much, but we don't care about this 23.6%, depending upon what you're trading. When I'm entering a position based off of my Fibonacci, I usually want to enter at a 38.2 and a 50%. Number one, because this pullback, this slight pullback to this 23.6%, that's not a major retracement. Unless you're looking at like the Dow or the Nasdaq or, for instance, the SPY, which we're going to talk about. But overall, I want to see an entry right around that 38.2 or that 50%. You take a look here at the Nasdaq, you can see that pretty much spot on. The Fibonacci is going to act as a perfect support and resistance all the way around. We bounced right here at this support multiple times. We rejected once here before pushing up, tapped that 23% line, pulled back down, held that, 38.2%, fell below, held that 50%. And basically you could have been trading these movements on this Fibonacci for multiple months at a time. Like I've said before, as far as your entries and exits, you really don't want to enter on the 23.6 because it's not that significant of a retracement, and we're going to show you why. But however, if you look at the Nasdaq right here, it does look like we are going to take a leg up. Now, of course, fundamentals will have a lot to do with this move, but if you look at how Nasdaq is setting up, we have this big push up. We hit the top where, we hit all-time highs. The Fibonacci pulled all the way down to this first level of retracement. We bounced, and now we have a strong bull flag forming. Now, this isn't going to be a bull flag video, but what we want to see is a push up above this resistance and then a move to the upside. However, if we reject, you know that it's going to pull down to this Fibonacci, then potentially down to the 200, and then down to this 38.2% support, which at that point I would believe that we will for sure bounce. Now, the way that you would want to trade this is something that's pretty good example, and that's going to be NEO. So if we take a look at NEO, obviously the stock has been moving up significantly over the past year. If I go down and I put my Fibonacci right at our lows of the time frame that we're looking at, which in this case is a daily time frame. So each one of these candles represents one day, and this is a 1 year look at the stock's performance. And we were to go from lows all the way up to highs, you can see that the stock pushed all the way up, pulled down, broke that 23.6% support. So really not the best time to enter if you were looking to get in at $52. We fell, tapped that support at $42, which would have been a pretty good entry at this 38.2% support. But instead we broke that support, fell all the way down, tapped the $34 price point, which is at this 50% support for the Fibonacci. Now, with a stock like NEO that has been consistently uptrending over the past year, you would very easily say that the stock is in an uptrend. However, if this were to fall and hold below this 50% Fibonacci, most people will consider that as a reversal and start to downtrend. So a lot of people use this 50% Fibonacci line as kind of a line in the sand to say, hey, is this stock still trending up within this time frame, whether it's a 1 hour, 4 hour, daily, or weekly Fibonacci setup. So you can see that usually your strongest is going to be your 50% Fibonacci level, which we have double bottomed on most recently, which also that 50% Fibonacci line also perfectly lines up with this 200-day SMA. So taking a look at NEO, I have a pretty high conviction that we would be holding this support of $34.50. And if you're a part of my private academy, you know that all last week and this week, I've been saying that we're going to bounce at 34. We're going to bounce at 34. And of course we can't, we could have fallen below 34 and started to make our way down to 27. But overall, there's high conviction that a stock will bounce at that 50% Fibonacci. So now, how would we enter and how would we exit trades going off of this Fibonacci? And that's what we're going to talk about now, and we're going to stay on NEO. So let's zoom in a bit. Now, let's say that we were playing this move right here. So the stock hit 66.99 and then pulled back down to our first level of Fibonacci. Now, I like to use the Fibonacci with the other main indicators that I use, such as the 50-day SMA, the 100-day SMA, and the 200-day SMA, which is what these lines are. If you don't know what they are, I don't think I've made a video on this channel about them, but I will make a video on this channel in the future. But these are extremely important levels as well. But if you were to just remove our SMAs in general from the equation, you're going to get a better depiction of where we're bouncing as far as the Fibonacci levels are considered. So you can see right here that we broke our support, and since we know that the 23.6 Fibonacci level doesn't really matter, we would say, okay, let's sit out, let's wait. I don't want to prematurely enter this position. Let's give it some time. So now when the stock fell down to this 38.2% support and or $42, you can see that multiple times we bounced before here on NEO. I mean, what is this? 1, 2, 3, 4, 5, 6, 7 times we bounced at that support before. So to be quite honest, I would say that there's a pretty high chance that we are going to bounce at this support. And so if I wanted to end up taking a position on NEO here, what I would do is be looking to enter around $42, $43, because you don't want to, set an entry perfectly at the Fibonacci, because sometimes we will just come right to touching it and then push up, and then you're not going to fill in your position. What I would have also done was set a stop loss somewhere down here around $40. A lot of people try to set their stop losses way too close for comfort. For instance, if somebody entered at $42, they would set their stop loss right here, right below the Fibonacci, as you can see here, and they would probably stop out. Now, anytime I take a position, especially if I'm trading on a larger time frame, which you would use a Fibonacci for, I like to go in with less money than I usually go in, because it'll give me a wider gap as far as my stop loss is considered. So let's say that you're using a proper risk management percentage of 5% of your portfolio before you go and cut your position. What you could do is, instead of entering with your full portfolio and giving yourself that 5% stop loss, what you could do is enter with half of your portfolio and give yourself a 10% stop loss, because 10% of a position that is half of your portfolio is still only a 5% loss overall on your portfolio total. And if you guys don't understand that, I have tons of videos on risk management, and I will be making more in the future. But when I'm entering a position, I like to enter small to start, so this way I don't get stopped out and then the stock ends up rebounding 23% within 2 days, which tends to happen a lot. However, you would see that right here off of this purchase alone, you could have made 23% in 2 days. Then from there we rejected, and this is where Fibonacci levels come in handy when you're looking to exit. I will make a video about Fibonacci extensions in the future, but even if you don't want to use an extension, usually you're going to use the Fibonacci lines as entries and exits. So like I said, if you entered at this Fibonacci line and it bounced at $42, then you could look to exit right around 52, 53. For me, I would probably actually exit right here at 51, because like I said before, sometimes the stock will go above, below, or just barely touch the Fibonacci lines. It's not like it has to hit perfectly and then reject. So I probably would have sold at $51. Now, of course, we rejected here. We moved back down. You could have potentially tried to re-enter at 42. This time we broke major support, fell all the way down to that 50% Fibonacci level, which we know is the strongest Fibonacci level. So if you have something like NEO that's been moving up for almost a year in a consistent upward pattern, the stock is down 50% in just the past couple of months, and we're holding at support at that 50% Fibonacci. For me, that's a no-brainer to enter. Once again, you could enter at this support of $34 at that 50% Fibonacci level. I would set a stop loss pretty far down because, like I said, I'm trying to be generous here, especially if you look, this is a one-day chart. Even though the stock has gone below support, it didn't end up closing below it. And that's why I tell my students, it's stupid and it's a hokey saying, but it doesn't matter where the candle goes, it matters where the candle closes. And that's the same thing that happened here. We went all the way down to 31, but the stock actually rallied throughout the day and closed all the way up here at 38 bucks. So if you would have held a very loose stop loss, maybe around 31, 32, around 31 or $30, you could have entered. At one point, you were down 7%, but remember, we're looking for that 10% stop loss because we'd only be using half of our portfolio. The stock rallied all the way up to the higher Fibonacci level at 42 bucks. We would have made 21%. It tried to get above it, wasn't able to, broke support, fell all the way back down to $34.50. And now you could be entering this trade once again. And I've been selling puts on this stock. I've been selling $31, $32, $30 puts for the past couple of weeks and just collecting premiums every single day. But overall, this is how you would look for your entries and your exits with a Fibonacci. Now, if we take a look at something else, potentially like Snapchat, we kind of have the same setup going on here where the stock is holding its 38.2% Fibonacci level. It has bounced here at support multiple times before. You can see that it also acted as a resistance once again. And you can see that now we are holding here at this Fibonacci line once more. Of course, the stock could fall down to the 50% support, but because we have bounced here so many times, I feel confident that Snapchat will make a move up. Now, of course, it doesn't have to, but I believe that the probability is there and it's something that's worth risking a position on. That's for me personally. Taking a look at WTI, same type of situation here. Big push up, bouncing, looking like we're going to take a move up. Looking at something like Palantir, however, now this one is completely different. In this scenario, we actually broke the 50%. We fell down to the 61.8%, and now we have broken the 61.8%. And it looks like the stock, unless we can recover quickly over the 23, is probably going to move its way down all the way to 17 bucks. Now, I talked earlier about how Fibonacci's can actually be used for shorting stocks or for actually getting puts and playing the downside to it. And the way that you would do this is by going to whatever time frame you're looking at. In this instance, this is NEO once again on a 1 hour time frame, and you would bring yours from highs now all the way down to lows. And you can see that just like clockwork on this 1 hour chart that we are using these Fibonacci supports, and it's pretty accurate. Now you can see that in this case the stock took a major fade, took a big push up, and now what you want to see with these Fibonacci resistance lines is you want to really be focusing on the 61.8 and the 78.6 as your entries to the downside. So you can see that the stock pushed up, slowly moved its way down, rejected right here at 44, and then slowly made its way down once again. If we take a look at Palantir here and we go to a 4 hour chart, and let's say that we wanted to play the downside on Palantir, let's just look at this little move here. And here's the thing too, guys, that you have to remember. When you're using a Fibonacci, you don't have to zoom all the way out and use that time frame. You can just take this move right here and you could use this as your Fibonacci. It's not that you have to use a specific the entire time frame that you're looking at, is that you want to try to find within that specific time frame the move that you're looking for. So like I said, we're using a 180-day chart right now, but I'm only zoomed in on the past 63 days. So I'm really looking at 2 months. And it's the same type of thing here. We had this push up, the stock is moving its way down, it bounced up, and now at this time, we're looking to enter a put position around the 78.6 and the 61.8. So as the stock pulls down, it retraces back up. This is where you would enter your position. As the stock fell, you could take your profits here at 61.8%. You could take your profits down here at 50%, and you could take your profits down here at, your 36.8% support. For me, I'm a very, very conservative trader, so I don't like to try to ride it down throughout all these supports. I want to take my profits when I have them, especially when the market has been extremely volatile, like it has been for the past year, but more so the past 3 or 4 months. So overall, like we said, you're going to use a Fibonacci to find retracement levels on a trend that goes up or goes down. You can also use this as a way to find reversals. If a stock were to hold below or above that 50% trend line for multiple days or multiple trading sessions. Remember that this works because people believes that it works. Now you guys know how to enter on these retracement levels. Know that the important retracement levels are 38.2%, 50%, 61.8%. You cannot day trade with these. Short-term scalps just will not work. We talked about how to take your profits, how to stop your losses. And overall, guys, like I said before, this is just anything with trading. Give yourself some time and give yourself some room when it comes to setting your stop losses. Because for me, I don't like to prematurely get knocked out of a trade because I have too much money. I would rather actually sit around and not go in with a full position rather than going in with a full position from the get-go and then getting stopped out, or worse, not setting a stop loss and then just taking a massive hit. Overall, guys, a Fibonacci is not going to make you a professional trader. None of these indicators are. Unfortunately, that's just how the game is. But using this with proper risk management is going to do wonders for your trading. Guys, thank you so much for everything. Hit the like button if we provided value to you guys. Thank you for all the support. It really means the world to me. To be part of my private academy, get access to all my trades live as soon as I take them, live stream with me and my team every single morning for the first hour of market open, get access to our private Discord with 575 other traders, and get access to our 60-hour course library that teaches you everything we talked about within this video and tons more. Use the link down below. Use the code Academy90. You can start for $10 your first month. Also, go check out our Twitter if you guys want to stay up to date with me. I've gotten rid of all other social media besides Twitter. I'm just trying to declutter my life and trying to really focus on the things that matter within my business and within my trading. So thank you guys for everything, and I'll see you next time. Peace.